Welcome back. You're watching HFO-TV.
Before I introduce Ted, I'll give just a brief kind of recap of what we've seen in the apartment market on our end, some of which John has already alluded to. We've seen, depending on what report you'll see, we've seen the Portland rent growth, according to econometrics, Portland was the #1 in terms of rent growth of all the 50 metropolitan areas for December. This just came from Multifamily Northwest, their fall report, where the average rents are now up to $1.33. And we've got vacancy below 3%. So the fundamentals on the Portland apartment market, again, as John alluded to, for some of the factors of the increased immigration, the delay in kind of life decisions, and the home ownership rates have driven, the Portland market in terms of historically low vacancy rates and historically high rent growth. So regardless of what report you see, we've had, historically, strong market. Again, according to Metro Multifamily Northwest, we're at 9% over the year, and according to econometrics, in January of this year, it was 12% annual rent growth. Now, again, they typically focus on larger projects and in core, so it's not all the submarkets where Multifamily Northwest has probably a broader scope of the Portland market. With the strong fundamentals, we've seen development in the last 2 years have increased. As John alluded to, permits are not up this much last year as opposed to 14, but 15 was still a very strong year. This is planned and under construction. As you can see, the big thing is it's predominantly close in east side, close in west side, and then outer west side. We've not seen a lot of development in the suburban east side, Vancouver, Clackamas at all, but so it's very concentrated in terms of where the development's going to be. In terms of transactions, we've seen, this is through October, 10 units and greater. We've had more transactions in volume through October than we did all of last year, so we've got a record coming there. Regardless, we had 207 transactions in 2014. Through October, we were already at 203 total transactions. In terms of volume, we're at $1.6 billion through October. In 2014, we're at 1.5, so we've already passed that record. And a lot of that is driven by large projects, 10 million and greater. In 2014, we had about 31 projects, 10 million and greater, that traded hands. Through October, we are already at 43. So because of the large number of what we call institutional deals, that's why we've had this explosive growth in volume. A lot of it is driven, again, by the fundamentals. We've got a lot of capital looking for places to invest. Portland's now on the map. We're not considered a secondary market in terms of large capital, and so it's flowing into this market and trying to get transactions. So again, we don't expect this to change much next year, other than just, interest rates, as John mentioned too, have gone up, and we haven't seen a big effect on that in terms of cap rates. It's going to be more just a matter of, is there product out there that's ability to change hands, which will drive some of this. The things we're going to keep an eye on in 2016, rising interest rates. Again, I think some of that is maybe overstated. We saw a little bit of a bump. The market kind of already priced that in. The political climate, which is kind of why we brought Ted here too, just in terms of what's going on. And the required seismic upgrades, really for Portland, looks like that's on the docket and is going to get passed. And then the big thing everybody's talking about is affordability of rents, where that is in relationships to wage inflation and the affordability of rents and the rent growth. So those are the things we're kind of keeping an eye at for this year. Our prediction, I'll just make it quick because we're running out of time, we think we'll continue to see strong investor demand. Again, with the lack of investment options, Portland is definitely on the map, and we'll see this across all types. Our recovery started on the larger institutional grade properties. They were the first ones to kind of come back in 2010. We saw big cap rate compression in the C and B properties last year. I don't think we'll see continued cap rate compression. We will see continued appreciation, but it's going to be driven by rent growth. We've got institutional core projects selling at low 4 cap rates. I don't believe they're going to get much lower than that, especially with these little adjustments in interest rates, but we will see continued appreciation so long as we have rent growth. The other big change I think will be you'll see more new construction with the cost of land in the core, the cost of construction, especially on high-rise construction, looking at ways to try to maybe in the outer submarkets doing more of your standard garden-style projects based on affordability, and the rent growth that those submarkets have seen are making those deals now pencil. So those are kind of our predictions for 2016. I think at some point we'll look back at 13 and 15 and maybe even 16 and 17 and say it was the golden age of apartments. With the continued investor demand, both on the small side and private capital side and institutional side, coupled with the in-migration and the rent growth and the job growth for Portland. I mean, I can't imagine any other market that's done as well as we have in the last 2 years from apartments. So that's kind of a quick recap.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.